market that you're trading. Kind of one of the key ones to watch is whatever the government does, the government policies and regulations, and that comes in a variety of ways. A lot of talk about alternative energy sources. You know, we hear discussion about global warming and cap and trade regulations and all those kinds of things could have a very strong impact on what happens in the whole energy area and what it happens to the markets like coal or natural gas or ethanol, because we have some markets like ethanol being encouraged, some being discouraged like coal. So all of those factors, you got to keep in mind what's going on with the regulatory side. Another regulatory aspect is we could be facing position limits in energy markets, energy futures, as we have in some of the grains. The proposals that I have seen so far that have been submitted do not appear to have much of an effect at all, or would not have much of an effect. It doesn't be much change, almost like no regulation. Then, of course, you have the financial reform that is affecting the banks. And then when we talk about banks, we talk about the bank/hedge funds types of operations like a Goldman Sachs or something. How will those reform issues, how will they affect the energy market? Thing you have to keep in mind as you trade the energy side. And then naturally there's always weather, as you probably know. Every time it gets to be a cold snap, and you know, in the Northeast people get worried, and so it affects it. We have to watch for things. Maybe this next year is a big hurricane season. You know, we don't know what it'll do. So weather is always a factor, as is geopolitical tensions that could occur anywhere in the world. Seems to always happen where there is a source of oil. So you know, those are givens. They're going to happen. They're just, that's the way it is in the market, and probably, you know, almost a sure thing that you'll see something in there. One thing you do want to keep in mind is that the NYMEX web pages, if you trade energy and use the NYMEX contracts, that those web pages are making their transition to the CME Group website. And so if you are involved in, you know, looking at NYMEX and trying to get your information or other details, you're going to find a little different situation in the near future as they change over the site from NYMEX over to CME. Now, I don't know if there are any questions. If you have any questions, you can start putting them in there. You know, as you take a look at this final screen here, which shows you the contact information, you can, if you have any questions about the markets or about what I have said, you can ask me or ask the questions here. If you have questions about Vantage Point and about any of the pricing or whatever, you see the information on the screen to get that information right there. Click there, and Darrell will tell you about that in a minute. One thing I do want to do before I answer any questions, and that's kind of get a feel about what people think in terms of oil prices. Again, I'm using oil as opposed to an individual stock, because the stock, you know, can vibrate back and forth on its own. But if you remember that little man in the lower left part of your corner, see whether you agree or disagree. And the question is, I think the price of oil will be higher on March 19th than it is today. And I picked March 19th because, as we were talking about the options, that's the options expiration date for the March cycle. And so if you think that oil prices will be higher on March 19th, okay, we're getting some disagreement to that. We get some agreement. Good. Good that we have various opinions, because that's what makes markets, and that's why we trade. Okay, well, let's go out a little further then. Let's clear those out, and let's test you. Let's see what you think about a longer term. I think the price of oil will be higher in 1 year than it is today. In other words, a year from now, will the price of oil be higher? Will it be the $100 oil again, or will it be lower? And I'm not talking, you know, $34 oil, but higher or lower. I agree it will be higher, if you agree. Okay. It's like we got some sentiment that the price will probably be a little higher. We haven't even talked about the inflationary factors and so forth, but you know, you have to keep that in mind as a possible influence too. Okay, now for questions. Question: how will things in China impact U.S. stocks? Good question, because there are so many individual issues that are involved with, you know, in the stock market situation. I would say that in general, with the cool down in China, a little bit of a slowdown that you see have supposedly are seeing in China, that it could have a bit of a negative impact on U.S. stocks if they're in a situation where trying to cool the economy and not attempt to buy as much, or they're trying to compete with the U.S. For supplies or whatever, and they're not buying as much of a given commodity or whatever, that it could have a bit of a negative impact. China right now is a bit of the growth engine for the world economy, and if it's not there, who's going to pick it up? It's hard to say right now, because the rest of the world, and when you have countries in Europe that are talking about going bankrupt like Greece and Spain and so forth, you have kind of a weak situation globally as it is, and so you got to look, where's the buying going to come from, and if it's not China, who? And if it's not being done, then it's probably going to have a negative impact on a lot of different prices. Again, a lot depends on the value of the U.S. dollar. A lot of things going on in that it's hard to separate one from the other. Are there any other questions? They say I couldn't look at all the stock market things. Okay, how related is gold price to oil price? There is a gold-oil ratio. If you were to, I didn't draw this out, but if you were to look at it where you've seen that gold has gone down, and actually if you compare gold with oil recently, I think if you look at some of the gold, like the gold stock sector, you will find that it has dropped fairly dramatically since December compared to the oil price, and so that ratio tends to get into line. I don't remember what the exact figure is, but it used to be there was a ratio between 1 ounce of gold, and how many barrels of oil you could buy. And I don't know what that is, but I know it had gone way out of whack last in the summer of 2008 towards the oil side, and then it went out of whack to the gold side just recently. So there is a relationship there. I just don't know precisely what it is at the moment. Do you think that Russia flexing its muscle recently with natural gas, especially to Germany, is going to skew Europe back towards oil? Long term, I don't think so. Short term, perhaps. I think that one of the things that we have is there's a kind of a momentum building up to go to natural gas. There's a lot of infrastructure being built. They're talking about even from the United States being a large supplier and building up, which they can't do yet, but export facilities and so forth to ship to Germany. I think that natural gas probably is a little bit more favored as the fuel of the future because of the concerns about the environment and the whole global warming issue. Short term, yes, I think that Russia could do it. Russia has done it